For today is about conceptual framework and theoretical structure of financial accounting and reporting, part 1. So for the conceptual framework and theoretical structure of financial accounting and reporting, part 1, it is the financial statement. We all know, class, that the financial statement is the financial figure, or it is made of, or the content of financial statements are the balance sheet, which is the financial position, the income statement, which is the financial operation, and the statement of cash flow, which is, we all know, the in and outs of the flow, inflow and outflow of all the transactions that coming in, which is the cash, and everything in that we are using in the business operation, and the outflows, which is the expenses as well that incurred. And this is also the results of the operations of the business, the results of the business operations that the decision maker, like the business manager, the owner, will always check or monitor the financial statement. If they have to decide to continue the operation or not, they have to decide what if ever na mag-cost cut sila something na, like for example, the electricity. If we know nowadays, especially in pandemic, we have only kumbaga required na parang air condition na pwede nating i-open sa isang establishment, and we have also to kumbaga yung close, if ever before pwedeng close yung office. Sa ngayon, we have the IATF or the government has imposed a policy na kung ano lang ang pwedeng air condition na pwede nating ilagay sa ating sa loob ng opisina natin. So also, one factor of that is we also have to cost cut sometimes the electricity, since nowadays not only small businesses are affected due to pandemic, but the big businesses. So this also explains all this conceptual framework. Why the financial statement are very important. So financial statement prepared for this purpose meets the common needs of most users. So you know already who are the users of this financial statement. This is because nearly all users are making economic decision, for example, to decide when to buy, hold, or sell an equity investment, to assess the stewardship or accountability of management, to assess the ability of the entity to pay and provide other benefits to its employees. Financial statements are to assess the security for amounts lent to the entity, to determine taxation policies, to determine distributable profits and dividends, to prepare and use national income statistics, to regulate the activities of entities. And also, conceptual framework sets out the concepts that underlie the preparation and presentation of financial statements for external users, or IFRS, or International Financial Reporting Standards. So that is why what I am explaining also to you, the purpose of the conceptual framework is to assist the board in the development of future IFRS, and it is review of existing IFRS, to assess preparers of financial statements in applying IFRS and in dealing with topics that have yet to form the subject of an IFRS. Also, the purpose of the conceptual framework is to assess auditors in forming an opinion on whether financial statements comply with IFRS, to assist users of financial statement in interpreting the information contained in financial statement prepared in compliance with IFRS. The purpose of the conceptual framework is to provide those who are interested in the work of the IASB with information about its approach to the formulation of IFRS. Scope of conceptual framework. The objective of financial reporting, the qualitative characteristics of useful financing information. So you have to give the use, this is useful on financial information because you can get the results of the operation of your business. That is why I am explaining to you a while ago that this will help the decision maker, the business managers, the owners of the company can help to decide what to do or how to continue to operate on his or her own business. The definition also, recognition and measurement of the elements from which financial statements are constructed, concepts of capital and capital maintenance. For the objective of general purpose financial reporting, the objective of general purpose financial reporting is to provide financial information about the reporting entity that is useful to existing and potential investor, lenders, and other creditors in making decisions about providing resources to the entity. Types of useful informations. General purpose financial reports provides information about the financial position of a reporting entity, which is information about the entity's economic resources and the claims against the reporting entity. Financial reports also provide information about the effects of transactions and other events that change our reporting entity's economic resources and claims. So for the types of useful information, economic resources and claims, changes in economic resources and claims, financial performance reflected by accrual accounting, financial performance reflected by past cash flows, changes in economic resources and claims not resulting from financial performance. And limitation of general purpose financial reporting to general purpose financial reports to do not and cannot provide all the information that existing and potential investors, lenders, and other creditors needs. General purpose for financial reports are not designed to show the value of a reporting entity. That ends our lessons for today.